Hi, my name is Alyce Phinney, and I am a private wealth advisor at Argent Bridge Advisors, and welcome to our December edition of Coffee and Conversation.
Hi, I'm Dianne Nolin, managing partner of Argent Bridge Advisors. Alyce and I have 3 great year-end charitable giving ideas for you. Alyce, why don't you start?
Yeah, I'll start with the first one. So there's something called a Qualified Charitable Distribution. You can take this distribution, also known as a QCD, from your IRA, this would be your tax deferred IRA, and you can start doing this at age 70 and a half. And the important thing to know is that even if you're not in your required minimum distribution years, which is now starting at 73, as long as you're 70 and a half, you can take advantage of this. And what it means is that the government is allowing you to be able to encourage you to make a charitable contribution. And if it comes directly from your IRA, you do not have to pay any ordinary income tax. So you get to save yourself a little bit of money, or you can gift the charity a little bit extra.
Great point. And the second is highly appreciated stock. We recommend adding that to a donor advised account or a charitable account. Taking that opportunity to contribute a highly appreciated asset saves you the capital gains if you were to sell the stock, let's say, and give that money to charity. The second part of that is the stock can go into a donor advised account, a charitable account, for which you don't have to decide exactly who is getting the benefit of that donation, because your tax deduction was made when you made the donation into the charitable account. So you have plenty of time to think about where that money would go. And in the current tax environment, if perhaps you have an income year or a year where you have more deductions, if you're filing with a standard deduction, it's better to make that charitable distribution bunched up into one tax year where you can benefit from the deduction for potentially several charitable gifts in one tax year.
So I'm going to just add an example of that, Dianne, just because I just recently did it for a client. So I have a client who inherited some McDonald's stock many, many years ago from their grandparents, and obviously it's appreciated over the last several decades. And so what they did is exactly that. They moved in what they thought would be about 5 years worth of future donations. In the meantime, the account is growing and it's tax-free to them. So it's a wonderful way to make donations. And let's say you didn't want to do a full donor advised fund, you could just do a one-off. So let's just say you want to just do throw some McDonald's stock at one particular charity. You could do that same thing. You would move it over directly to the charity. They would in then turn sell it and realize the gain. And of course, they're exempt since they're a charity. But more importantly to you, you made a charitable donation and it was tax-free to you because all of the gain is tax exempt.
And let's use an example too of, say, a $25,000 stock position. You gifted $25,000. That's your deduction, but your basis might have only been $5,000. So again, avoiding capital gains on the donation, but also getting the full value of the stock as your donated amount. Those are great. Those are great tools to use here at the end of the year for both benefiting the charity and your tax picture.
And it's on everyone's mind since we're going into the end of the year and you might be feeling, holidays and spiritual and giving. So happy holidays.